The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And I was out yesterday, had a lot of fun. Went over to my nephew's school, and he had a hard time reading. I got him some trading books, and he got all into it. His teacher saw it and asked me to come out and speak to the students. And it's pretty cool. Had several classrooms in there. And we got into all sorts of information. I started off with a video of my daughter from when she was 3 years old, trading the S&P 500, made like $150 the first time she traded. We traded at night. She was just scalping for like, a couple ticks at a time. And so anyway, so I started off with that. So after that, I had them first they were like, oh, investing, this is boring. And also they were all into it then. And I'm like, and she did this at night, after school. So they were all into it, and then to motivate them to answer questions, I made them all trillionaires. I got a whole bunch of $1 trillion Zimbabwe bills off of eBay, and was just asking them questions about currency and how things work and what is stock and going through things. And we went into like, what is the Federal Reserve? It's not federal, it's not a reserve, and how does the whole system work? And they were fascinated. We brought up charts. We talked about that and why they need to be able to compound their money faster than any job can do it, because the government will inflate it faster than any job can make it. And so saw some eyes light up, and going to have some future traders out there. And it was very cool. I mean, some were coming up after, and they're like, man, my dad did this stuff, and I thought it was so boring. But, man, I didn't know it was this cool. So it was really fun, and just enjoyed it a lot. And encourage you, as you learn, help other people. And it's just a fun thing to do. So I sort of took the day off and just went out there. But appreciate that. Now I am going to be heading out next week. I'm heading on out to Alaska, going on out to Sitka. And one of the traders I work with, he owns a big area out there, Sitka Point Charters. And so if you ever want to go, like, this is the place to go. Sitka used to be the capital of Russia, okay? And or the capital of Alaska when Russia owned it. Sorry, a little bit off. Capital of Alaska when Russia owned it. It's an island. It's basically like a rainforest island. It's about 50 to 75 degrees. You're not going out there in sub-zero weather. And beautiful place. And I was talking to Mike yesterday. I mean, they get these fish that are just insane over here. And check this out. I mean, you have to throw them back. I want to say if they're like 70 to 140 pounds, you got to throw them back. So if they're like under 70, you can keep them. If they're over 140, you can keep them. If they're in between, you can't keep them. And so he's talking about how they had to throw back some 100-pounders yesterday and everything. And I mean, these things, they just eat you, So just huge salmon fish and everything else. But beautiful. I went out, I've caught some barracudas and stuff out in Florida. And some shark fishing out there. And, of course, a whole lot of other, perch, red perch, and everything else. But these are just some insane fish. So looking forward to it. And he owns the lodge out there as well, so you can stay at the lodge. They have like side cabins, and we head out like at 4:30 in the morning. So, which will be nice thing is it's at 7:30 for me. And but I thought I was going to be able to go on a vacation, right? I'm getting up at 4 o'clock to grab breakfast and head out. But it was going to be a good time, so I'm going to be out. So we'll have some guys helping substitute for the show next week. But if you ever want to go out to Alaska, check out SitkaPointCharters.com. And let's check out where the markets are at. We got the S&P is down 3 points. We got the Russell down $1.30 right now. Nasdaq's down 20, with the Dow down 67. Oil's currently up $1.18. Natural gas down 15 cents. Corn is up almost $3, with soybeans down $1.50. Euro dollar flying on up 151 pips. Aussie dollar up 25. Pound dollar up 200 pips. That's right, 200 pips. Dollar CAD is down 88 pips. Canadian getting a lot of strength off that number that came in way above expectations. We also have the dollar franc down 129 pips. And we have the euro yen down 86. The pound yen down 216. The U.S. yen down $1.83. So the yen is showing incredible strength. The dollar is getting cremated. We got gold right now up 16.7 right there, so over 1%. Silver's up almost 1%. Copper is down over 1.5% on the day right now. And so just really a crazy, crazy day. And checking some things out. Let's go in and let's look at, we had all this news come out, and let's look it up, okay? And let's see what happened. So we'll pull up some charts along with it as we're going through it all step by step. But last night, obviously, we had a lot of news come in. Early this morning was when all the big news came in, right? We had a couple of things come in last night. So I'm going to pull up each one of those charts, and we're going to talk about them. And just look over the news report so you can learn. And one thing I talk about, I'm looking at releasing this on TFNN with a news trading newsletter. I go in and talk about how to actually trade the news. And I would have 14 strategies that I use on trading the news. And that is depending upon what opportunities present themselves. And I think that could be a big hit. So among a lot of the traders out there, it gives you a plan and goes really well with the binary and the spread scanner. But let's see this file. Let me open up a chart, and then we're going to start flipping some contracts here. We'll start off with, let's just say, the Aussie dollar, okay? So that was the report that came in last night, and wasn't a report I actually was trading, so it wasn't on my list to trade, but I want to pull it up and just show it to you. Big moves, of course, came in this morning on it. We got that, and let me pull up the chart. I'll bring it over to the screen. You'll be able to see it here in just a second. That ought to be starting to populate for you right about now. There we go. Okay. So last night, we got the Aussie dollar announcement. It comes in at what time over here? We got, let's see here. Sorry about that. I had to move my screen over. All right. So it comes at, the trade balance came in at 9:30. So I'll hop on over here. We'll go on in to the evening hours. And that's going to put us right at about, let's see, 19:30 right here. And it came, it pushed down the Aussie dollar. It was going short. And Aussie then reversed when the dollar, totally reversed this morning. But right here you can actually see, right about this time, we had the report come in, and it came in at a trade balance at negative 0.03. And that's pretty big. That's much larger than the usual deviation to come in on that. And but at 0.2, and it came in at 0.03. Anyway, so that was negative for the Aussie and dollar. So eventually that caught up to it, but it went ahead and went on down off that. Almost got a one deviation move off of that negative report. Here's the beautiful thing about this report is it didn't happen all in 5 seconds, okay? So it really became a post-news tradable event, and that's one thing I've been working on a lot, is you'll hop in on these trades, and you can do retracement on them, okay? So right here, you got the news comes out, and let's see, where's it at? 19:30. Comes out right there, and you get the initial drop. But this initial drop didn't happen in 5 seconds. Okay, these are 10-minute bars, so it took it a while before it got all the way down to a deviation. So before it even got down there, we're at what 95.24. Went on down to 94.85. So you got about 40 pips right there. And what's one of our methods? We talk about it a lot. Okay, when a bar closes under the deviation level, okay, and we're short on a trade, okay, so we have a short by breaking previous bar's low. Then we have our stop 5 ticks above the deviation level. So high, 95.03, we'd have our stop at 95.08. Well, that was like a pretty good spot to me because guess what? We go over here. What do we see? Well, we got a high. If I get rid of this error message, there we go. We got a high right there of 95.06. Beautiful. So then comes on back up, doesn't stop out. By the way, you could re-enter right here. So remember on the retrace and pull back. So it pulls on back up, gets that close, and starts heading back down. So if you decide to get back in and add in, not necessarily re-enter, maybe it's your first entry, whatever, on the pullback, the initial spike. So you're going to have that spike and then that pullback and then the continuation. That happens on a large majority of the news announcements. Well, it does that. Our stop's right here. And then you could have tightened the stop several times. So one, of course, if you're in on this trade, you would have tightened the stop 5 ticks below this bar. Okay? Now, if you're in on this trade, you tighten the stop. It closes below. And now if you did, I like to tighten my stops as fast as I can. But as far away as possible. So, because I don't want to get stopped out, of course. Now, if you did it as fast as you could, there's one other technique, and I talk about this I've done it quite a bit in the past, so I haven't talked about it for a couple weeks, is when it closes below the deviation level, so which is right there. So if we back out and look at, what deviation level are we on right now, it's the 0.5 deviation level, okay? So when it closes below that level, then closes above that level without, this is key, without stopping you out, without hitting that 5 ticks above. And then, again, closes below it. So basically closes below, then closes above, then closes below again. If that happens, then you can tighten your stop again. So you could have taken some profit right about here. You'd have been in the trade and then out of the trade. And, had a decent little run on that news. Okay? You pulled up basically half a deviation off. Well, then it does a pullback. You get another entry. Okay? When that happens, because it takes a little while right there. It pops up, and you get another entry on this trade. You could have went short again. As it's moving down, you tighten your stop. It moves on down. It closes below on this bar. You tighten your stop yet again. Okay? So it's below, below, above. What happens again? Below. Closes below again. So we tighten it again. See how it closed below right here? Okay? Then it closed above right here. And then it closed below right here. So we were able to tighten that stop yet again. And then finally over here, we get stopped out on the trade. So we're out on the trade right there. So we got the majority of, the move all the way down, nearly to the bottom by using the deviations. Well, we're down at almost one deviation. What is one deviation? One deviation is 68% of expected movement, meaning 32% of the time, the market will go further. So approximately, to make it easy, say there's only a 30% chance it's going to keep going. All right? And now I've tightened my stop, and do I really want to take an entry right at that point? I might be a little more cautious. It doesn't mean I can't, but I'm probably not going to use the same contract size. Like, let's say I got into 10 or 20 or 50 contracts. I may only get into, say, 5 or 10 or 15. I may cut it in half. So if you did take another entry, but I mean, you're sort of expecting it to, like, go from here to here. I mean, you're talking about another, 10, 15 ticks. And it can easily just oscillate before it bounces back off. So a lot of times it will bounce off of a one deviation level. The one deviation level itself, whether it be one deviation from the high to the low, or one deviation, the perfect one deviation level, which is off a settlement, either way it's a deviation. So what does that mean? So like right here, we take this high, okay? Then we go over here, we take this low, right there. Alright, so then I'm going to have to click on my chart there. Alright, so that's going to give me 111 pips. And then I can go over here and go, well, how far was a deviation from settlement to the deviation? About 118, so I got right in there. What I mean on this is a really important concept. You can use this going forward in your trading. I'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at
727-445-1044. All right, folks, we'll come on back here to the Diagnostic Trading Hour. And let's look at the caller now. We got Darby. Hey, Darby, man, how's it going?
I'm doing pretty good, man.
You enjoying Louisiana out there?
Yeah, down in Montague, almost on the coast.
There you go.
I trade the E-mini futures indices almost every day. Well, every day.
Okay.
And I was wondering, what are the circuit breakers for for the Fed? I know the Fed labors under the false misconception that they can control the markets, but they have circuit breakers in place where they would stop the indices from moving if they went too far down?
Yep, they do have circuit breakers in place. Now, what's interesting, and I'll show you actually where to find them, okay? What is interesting is, you remember the flash crash day, like in 2010? And the market, I mean, it fell like an insane amount. I was listening to the audio on the pit while the market was crashing. And Ben Lichtenstein, he does the pit audio, and he's like, I have no idea what's going on, but they just lowered the circuit breaker. They actually lowered it live in the middle of the day. And so they could see the order flow, and they saw like where it was going to run out and pop back. And so they literally lowered the order flow. I'm short on this thing, just flying down. And it went like right within like 3 points of where they lowered it to. They would have closed the market down right into that, and then it popped back up 50%. So it's interesting. They can still modify them, but it's a good thing because, I mean, if the market shuts down, a lot of times it'll just start gapping down after that happens. So the idea is to try to, get everybody to chill out for a second, you know. And but yeah, so over here, exactly, catch your breath. You know, fear's controlling things. Let's get a little reality check. And I mean, like corn. I mean, all of them have limits. Or not all. FX doesn't have limits. Okay, but the commodities, the indices, they have limits. So what you do is you go over to products and trading over on CME Group, and under Globex, you're going to hop over on equity index. You'll scroll down. You'll find your contract you want to trade, such as the E-mini S&P 500 futures. And so you click on that, and then you'll have the contract specs. And then they'll say daily price limits right there. See that? And if you're watching over on Tiger TV there, and then you click on view price limit details. And then what they'll tell you is the CME Group U.S. Equity Index price limits and CME and CBOT rules are designed to coordinate with circuit breakers on the New York Stock Exchange. So they work together because obviously S&P 500. And so what they'll do is that 7%, 13%, and 20% price limits are applied to the futures fixing price and are effective between 8:30 and 3 o'clock Central Time. And then, so if we keep going, so it's like, okay, what does all that mean? Because that's part of what you want to do is they actually give some examples. But a 5% up and down limit is effective between 5 and 8:30. Okay, so at night there's one, and then during the daytime there's one. So they actually change, and it's actually much smaller at night. So it's only 5% at night. Okay, but between 5 and 8:30 Sunday through Thursday, and then 3 to 4:15. So there's like that, you know, last hour right there, 3 to 4:15 period as well, because that's like the second night session or whatever.
Right.
And then but Monday through Friday between 3 and 4:15, the 5% price will not be allowed to breach the 20% daily limit. So 20% is they're shutting it down for the day. Okay, so let's say like they had like several of them move, and then all of a sudden, as they've been doing the circuit breaker where they put a pause in the market, like they're not going to let it become 23%. Right, there is a limit of 20%. So when it moves this far, they're going to put in a trigger. So during the regular hours, if it moves down 7% or 13% or 20%, and notice this is down, it is not up. Okay? Right. Now, in certain markets, it can be up and down. You don't want corn getting too expensive, that type of thing. So, but so down only. And so if it moves down 7%, 13, or 20, then the market will at least pause, if not shut down, depending upon how far, it's moved. And this actually shows levels and examples. And if we look at the E-mini on here, we can see the reference price, 1629.50. And so if I pull up the S&P E-mini right now, let's see where they're deriving that exactly from. I have a chart over here. Yeah, we'll pull it up on this chart right here. So right on this, if we pull up the S&P, I don't know how often they update their website. That's why I'm curious to see where that number's coming from. So yesterday the settlement price was 1608. The day before it was like 1631.25. So maybe this is a couple days outdated on their website. Stay right there. When we come back, I'll go into more detail on exactly how it works, so you know what to do if you're ever getting close to a price limit. Okay? So we'll be right back after the commercial break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit, and on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome back here to the Diagnostic Trading Hour. Still got you on the line there, Darby?
Yep.
Nope. All right, man. All right, so right here we got the reference price, and now this is going to be a day behind. Okay, as of trade date 6/5. Okay, so this was for yesterday. All right, not for today. But they posted the reference price over here 16.2950, so it's pretty close to settlement. Was it 16.3125? The reason that price is different is they actually calculate it in the last 30 seconds before the cash close. So where the options market closes there, between 2:59:30 and 3 o'clock Central, versus between 3:15 Central when the actual market closes. But they calculate it then. They use that number. They have to calculate it then because it goes into effect at 3 o'clock. So they have to have that number immediately in order to use the 5% price rule for the overnight session. Okay? Mm-hmm. So on the 5% price rule, if it moves up or down, okay, that's important, up or down 5%, then they'll put a trading halt on the market. Okay, a temporary trading halt on the market. Now, after 8:30, if it moves up 7%, so they actually show the example. Like if the market went up to 1711 or below 1548 between 3:15 and 4:15, and then the market closes for 45 minutes. Then between 5 and 8:30, if it hit these prices, they would shut it down for a little bit. Now on the 7% one, so like yesterday, if the market would have fallen down to 15.15, then they would have shut it down. If it would have fallen down to 14.17, they would have shut it down again. If it would have fallen down to 13.03, they would have shut it down for the entire day. Okay? And so it's very important to know just what these numbers are. And even if you don't have... Yeah, exactly. Well, it's only down for daytime, like for the daytime trading session, but it's up and down for the nighttime trading session. So if it moves up or down 5% at night, it's done. Okay? Like you cannot trade on it anymore. And then if we go over here, they actually show you what the symbols are. Now you have to have different terminals. You'll have to contact your broker to find out what they are. Okay?
Right.
But you can actually get those fixing codes. It's not going to be that much different, maybe a couple points different than like the settlement price. So you can use the settlement price as a pretty simple gauge on that 5 and 7 and 13% down move. And I mean, you're going to know if the market's crashing. I mean, 5%, I mean, can you imagine the market being down at, 15.48? I mean, that's a big move. That's like a 6 deviation move. So that might even be like a 10 deviation move. I mean, it's insane. It should not ever happen. In one day. So if that does happen, you're going to have a pretty good clue. But it's also it's so vital that if you're trading a futures contract, okay, that you know what these levels are, because what you don't want to do is get stuck and be waiting 15 minutes or hours to find out what the price is going to be when the market opens back up. Okay?
Yeah.
And that obviously could be a very dangerous situation. And you can have positions called lock limits, where, like corn will, like you're in corn, maybe you bought at the wrong time, the thing popped down 40 points. Maybe you just bought in at the bottom, like at 5, because you didn't know. You thought it was going to bounce off some level or something.
Yeah.
And the next day, it could like open up and it could literally lock limit like in a second before you could ever even get out. And I mean, this could, as you can tell, destroy you. Yeah. So one of the things, like when I teach people about trading futures, is I say, one, you got to know what your limits are, right? You need to know what the market's limits are in that market. And I mean, you have to know. And if it's moving fast, you better, you should not be trading any future contract that you don't know what the limit is, if you're actually trading the future. And you always need to be getting out before it gets there, period. Don't try to play it. Don't try to play the bounce. Don't play it, period. Okay? And then the other thing that I teach is there's a way, this is not perfect, but it is a hedge. A lot of times what will happen is, let's say if you're in corn, like they may, limits, in one market, like say the front month may limit, but the back month may not limit move. Okay? So a way to hedge yourself, and it's not a perfect hedge, is you could actually go in, and let's say you got stuck in a limit, you could go out to the next contract in the opposite direction to at least get a bit of a, so that ideally they'll, if corn's falling, they're all falling, Now, it doesn't always work that way. Swine flu comes out or something, and everybody thinks pigs are going to kill everybody. Then, they're dumping their front month ones, but they haven't got rid of the back ones yet, because, those are going to be healthy by the time we get there. So it could invert on you as well. So there's some crazy stuff when you're trading futures that you got to be aware of. And, of course, that's why I love to trade Nadex as well, because I don't have to worry about that. Nadex actually is sort of cool. I didn't know this until probably about 4 weeks ago. And I've been trading on Nadex for a couple of years. But if the market, I'd noticed like corn went down. It shot down like 40 points a few weeks back on the ag report. When I was looking on the Nadex platform, I'm like, wait a minute, corn was still open on Nadex. And they don't have to shut down. Okay? And so I was like, that's really interesting. So what if corn got shut down and then reopened and popped up, So if you wanted to play like a reversal on a limit day, like where it shuts down for a minute, you could actually hop in and you could go in and buy a binary or buy a spread or something like that. I mean, you're probably going to be paying $5 for it. If the market does pop back up and open, you actually could make, a decent little profit. So just, just interesting ideas to look at. But yeah, they don't actually have to shut down. They can, but they don't have to. And they didn't that day. And then you have to dig into it a little bit more to get the exact amounts, because the circuit breaker rules, they update them. Okay, as far as how far and how long. So it's one of those things. You probably want to check it at least monthly, just to make sure you're up to par on it and what they do. But let's see if I go over here, and they even have the FX prices and all that stuff. There's all sorts of fixed prices they use. But let's see, they got the Dow.
With the markets I use though.
Exactly. You don't need to worry about what is the S&P 600 doing. The S&P 400. So, or there's a lot of just weird random stuff. You don't need to be worried about the limit moves of milk and orange juice and cold weather. I mean, there's literally like products on weather, you know. So you can do real estate futures, you can do weather futures to like hedge crops, so things like that. So it's some fascinating stuff once you dive into it. But hop on here, and you can go. There's a little FAQ page, and it's also very helpful. Right here, and it'll actually tell you the details, so we can dig into some of that, because I know some viewers, this is a new subject for them. They've heard about it, but they never actually dug into it. But I'll go ahead and post that over in the Tiger's Den, that link as well, too, so that way you can check it out. And it's basically the FAQ for it. And what it does, it basically says, you know, how did this come from? What happened? You know, what are the pieces, like step by step? And it'll, you know, sort of dig into it. And here's what happens is they update, like, see right here, they updated it. Because I was like, man, 7%, that seems smaller. It used to be 10%, 20%, 30%. They actually, April 8th, 2013, they changed it to 7, 13, and 20. So they're not even letting it move as far before they lock it down. Now, that means the market's less volatile. They don't want the market to shut down, right? So, I mean, if you're the CME, you don't make any exchange fees if the market's down. And also, it can create panic a little bit when the market, you know, does that. But they actually tightened up the level 1, 2, and 3 circuit breakers. Right. But they go into, like, each specific rule. It's like if a level 1 or level 2 market-wide circuit breaker is touched prior to 225, a 15-minute market-wide trading halt will be triggered. So if it hits 1 or 2, 15 minutes, but it has to happen before 225. Okay? After 2:25 p.m., this is Central Time, since they're in Chicago, after 2:25, the 7 and 13% don't apply. So like if in the last 30 minutes of the day the market crashes, they won't close the market until the market's dropped 28%.
Whoa.
Okay? So they'll let it go down. Yeah, they'll literally let it go down 20%. And in the event of an early close in the securities market, the 20% circuit breaker as the sole circuit breaker becomes effective 35 minutes prior to the close. So like if there's something else that happens or whatever, basically it's like it's the only one. But basically what you need to know is overnight, 5% up or down. Okay? Once the market opens until 2:25, 7 to 13% down. They'll close it for 15 minutes and then they'll reopen it. And then if it hits, like, so let's say it drops 7%. They shut it for 15 minutes. They reopen it back up. Let's say it drops another, 6%. All of a sudden it's down 13%. They're going to shut it for 15 more minutes. It opens back up. Now, if it drops down again and hits 20%, it's down. They're shut down for the day. It's shut for the day. Yeah, then they'll reopen it on the starting of the new trading session. So, which I want to say they'll actually reopen it at 3 o'clock. And they go over here. What about overnight? The 5% extended trading hour up and down limit. Put on April 8th, 5 to 8:30, and let's see here. I imagine that's 15 minutes. I don't want to incorrectly inform you. But you can definitely hop on and look at that. Okay, here we go. When this happens, it actually doesn't even tell you. And and they round it to the nearest index point, because the 0.5 index point.
So they're not looking at quarters. That flash crash they had with the AP hacking. That's around the time it happened. That was April.
That might be. I didn't think about that, but that's possible. Yeah. But that was crazy. I mean, I was on the air when that thing happened, and literally, I'm starting the show out. I do my little call out. I'm like, the S&P, is up like 3 points, and then I come back around and I look at it. I'm like, the S&P is down 20 points. I mean, minutes later, and I'm like, what is going on? And I hop all over the place. I'm trying to figure it out. And one of the websites I like to go to if I'm trying to find out news fast, it has just a ton of data. Else it is a data feed website with news stories, and it's financialjuice.com. One of my friends owns the site, and but you go in here and it's just constantly streaming stories. I was on Bloomberg, I was on CNN, I was on Fox Money. I had multiple websites up. The only one I could find the story on was there. So, but cool little site. Real simple, real basic. But just it's a good news source to hop on. And
I might look up on that one.
Yeah, so it's one of the ones I always have up and ready. And I don't really stare at it all day. It's more, you have that question as a trader, why did that happen?
Yeah, you
right?
go look.
And then you go and they go, oh, wow, that just came out. Or, I mean, sometimes there's nothing there and you don't know. And who really, I mean, at the end of the day, who cares why it happened except for can I learn from it for the future? That's the only reason. And
Exactly. So
sometimes it doesn't even matter because unless you know it's going to happen, you don't know why, it doesn't help you anyway.
Yeah.
But anyway, so this is, it's a good little website to help you out on stuff like that. But and then, you can also, of course, listen into the audio pit. Thinkorswim, this is a very cool feature of Thinkorswim. If you get an account with them, I think you can even get a demo and get access to this. Inside their platform, you can listen to the trader's audio occasionally. And it'll drive you nuts to actually really listen to it. I'd rather honestly listen to a live trader talking about the market. But every once in a while, sometimes going a little crazy, I'm trying to figure it out. Then I'll hop in there, and you can go over to their little chat area. It's a cool feature. And they got the market cast. There it is. There's Ben Lichtenstein, going. And so a pretty cool little feature you can take advantage of. But you can actually listen to the live S&P pit. It sounds like a cattle call. When I was a kid, I was growing up out in East Texas, West Texas. I have family that owns dairies, ranches. My grandfather, he bought cattle. He owned his own truck, and he'd bought them, and he'd sell them at the slaughterhouse. And so I'd go to all the cattle calls with him and, ride on the big semi-truck with all the cows. And they're all doing it was interesting watching that market because those cowboys, man, they knew what the futures price was, and they knew the new guy didn't. Man, they'd raise the price up on him, and then everybody'd pull their bids, and he'd be stuck with paying way too much, and they're trying to just run him out of town. But it sounds like cattle call. They're like, at first I couldn't even hear it, but after I sat there for about 45 minutes, I'm like 8 years old, then all of a sudden I actually started understanding what the guy said. It's weird how your ear has to train to it. That's sort of the same thing if you're listening to the pit. JP Morgan doing the Bank of America. Okay, we got paper going over, and it's about 10, 20 cards. And you're just like, how do you talk like that for 8 hours? But it's a skill set,
Really?
And it's sort of cool to listen to. But like I said, you can only do it for so long before you have to take some Tylenol. But anyways, so obviously that ought to more than hopefully answer your question right there, and where to get the updates on the answers. So awesome. Well, thanks for calling in, man.
I appreciate the answer.
Hey, you bet. You have a great day.
Have a good one, Darrell.
Hey, you too, Darby. Bye. All right, well, looking at the markets right now, we got the indices are mixed. We got the S&P and the Russells up a little bit. We got the NASDAQ and the Dow are down, with oil still positive and natural gas negative. And when I say negative, really negative. So natural gas right now down 4%. So that brings up a question, right? What's the natural gas limit? So let's pull that up, okay? Well, that applies. So let's go over here, and natural gas can really move. So I don't even know what the limit is on that thing. And I don't trade natural gas futures. They scare me. I do trade them on Nadex occasionally, but I don't trade them. It's too volatile. Look at that. I mean, it's just boom, boom, boom. What's funny is a 4% move, I bet it's not even close to the limit. 4% move is only a little over a deviation and a half. So it wasn't even a big expectation, outside of expectations. But, we do the exact same thing. We go into CMEgroup.com. And, of course, if you want to get, the Russell numbers. Now, Russell corresponds with the stock exchange. It corresponds with the CME. So, basically, when those shut down, it usually shuts down also. But I'll have the answer for you on natural gas when we get back. And we'll look at a couple other things. Stay right there.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Bezel Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Bezel uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Bezel gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Bezel subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Bezel Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Bezel's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Bezel's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we'll come on back here to the Diagnostic Trading Hour, just checking out natural gas. And you actually, what's interesting, you go over, and if it trades on NYMEX, you download this massive Excel sheet with every single contract. And it has all sorts of details about it and everything else, but it goes and tells you basically what rule to go to in the rule book, the chapter rule book, to get access to it. So that's fun and interesting. But if you trade natural gas, you better know what that number is. So hop over there, click on it, and check it out. But they got all the details. You just got to download it right here. Anyway, so that'll wrap up natural gas. But it's a big move. Nice moves. And not something, we're at almost 96% of the movement expected for the day at 2% there. Moving on down. And if you don't have access to the deviation levels, definitely make sure you hop on over to our site and grab a hold of those. We post them live right here every evening. And so right there, and we're saying basically 0.092 is the one deviation, which is about a 68% of expected move. And as these levels happen, I mean, notice like right when it hit one deviation, look at what happened, it pauses. When it hits almost every deviation level, you get a pause, but you definitely get a great place to trail your stops. So if you are a Nadex trader, you like to go in and trade on it. And let's say you get in, I'll say you get in up there. You can get in, you got another pullback, you get in right here. You got another pullback, you get in right here. So basically when it breaks the previous bar's low is what I'm doing. And we get over here. Let's say you have another short right there. Okay, so we just now broke to a new low. And your stops along the way, well, you got the bar that closes below the 10 minutes. You have the next stop right here. Goes down, closes below the 10 minutes. This bar closes 937. We got to close at 936. Did not close above. Okay, so we keep going. This bar closes below the 10 minutes right there on the 1 deviation level. And also closes below the 1.5 deviation level. It pulls on back up, closes on back down. And so you go right here, and you got 5 ticks above this level. And so that does not hit it yet. It closes below it, closes above it, closes below it again. And you can tie it in. I mean, that's probably like a tick right there. And now if we move below 38.17, that'll be our next level, and we'll be able to close it again. And if you want to, you could always go, well, what's a half deviation? You know, the difference right here, and you can see on the website is 0.046. So you could always subtract that from this level and sort of make yourself your own 1.5, 2.5 deviation level. In the rare instance that I mean, it's not often, but in the rare instance, I mean, basically it's right in between there. And if you hit like that middle level right there, you could also tighten it again as it moves on down. If we hit all the way to 3, that's like a 99.7% probability of maximum movement in a day. But natural gas just really getting kicked down today. And why would that be? What happens every Thursday? So you got to know this if you trade natural gas. If you don't, you should not be trading natural gas. If you don't know the answer to this one. We do have certain reports that come out on a pretty consistent basis. One of those is natural gas storage. And natural gas storage came in at 111 billion British thermal units on an expectation of 101 billion British thermal units. That means the storage was higher than basically expected. Okay, so more supply. And also it's significantly higher than previous. So previous storage was 88, one before that was 89, one before that was 99, one before that was 88, one before that was 43. So storage went way up, and storage was higher than they thought it would be. Therefore, you have an increase in supply. Therefore, you ought to have a drop in price. Well, when did this happen? When did this big move happen? Well, you can sort of tell. See that big velocity bar right there? Right here. So this is when the big move happened, and came in actually a little bit late. It took it a minute. So we'll drill down. We'll look at that a little bit tighter. But it was like right there at 10:30. That's the close of the bar, and then just pop. And so it looks like it's pushing out another half deviation after the pullback. I'll talk about how to trade this new trade when we get back from the commercial. You know what? We're not going to have a commercial break. So we'll have to talk about it next time. Thanks for joining us today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.